All right. I want to show us the same model on Euro NZD. How I actually traded the same model on Euro NZD. Steered on weekly time frame, an old low was stacked. This is the old low here. Just stacked. Now, you can be wondering how you could trust this setup. There are things that you must see in the marketplace, especially on daily and 4 hours time frame, that should set your heart on settling, on trusting this kind of setup. Now, show us more than 4-5 markets starting from the weekly time frame, which have told us that the two things I'm looking for in that market is old lows or old highs or fair value gaps, inversion fair value gaps, things like that. So this is stop point, which is clear when I've zoom it. It is clear that this is a stop point. You can see it from here. This is a stop point. Actually, price went below that place and reject higher. So looking at this place, we are not seeing any fair value gap on the I'm not seeing a fair value gap on the weekly time frame. So all we have to do is to go lower on the daily time frame. So when you check daily time frame, so on the daily time frame, of course, we can see a fair value gap here, which I highlighted. I had already highlighted it so that we can see it. Very important. Of course, you see how price first of all went through it, but you can see that price did not close beyond it. This first time it came here, price did not close beyond it. So it went through it rejects lower. So it came and closed beyond it. But then this daily time frame, I'm just trying to show us how this inversion fair value gap gives support to price higher. Now, I told us that whenever we have seen a weekly stop point like this in form of liquidity taking, we have to go back to the 4 hours time frame. So let's see what price had done there and how we could learn from it. So this is the area after the stop point. This is the stop point here. So we want to check this area here. So I've told us that after stop points, for this kind of model I'm showing us, is that you want to check if there is an inversion fair value gap, which of course is clearly here. It is clearly here. It's a rule based. Every of ICT concept is rule based. If you're not able to follow the rules, you might just discover that it's not working, and you don't want to be part of what is not working. So that's the inversion fair value gap, which price eventually entered into twice before traveling higher. The first time was around here. You can see after the inversion fair value gap, this is the immediate entry. It came, entered, rose higher, broke this last higher low here. Now after that, after a major break of market structure, this is the first place you want to be trading it. So after a break of market structure, please, you can take your profit out here and then expect it to come back inside. So you could use a Fibonacci tool from this low, using this range. Using this range, you could use a Fibonacci tool to still, catch this range, this movement here. So you could buy from here the first time, which will lead to the break of market structure. So you may not have even seen a 4-hour break of market structure before you could trade it. What you need to see is a stop points. This is the first stop points here, and then the higher time frame stop points. Invalidated 4 hours fair value gap, price entered back here, broke market structure here, which is the last higher low. No, the last lower high. Yes. Then after then, we could see, if you use a Fibonacci retracement tool to measure from this range low to this range high, this should be around 70% Fibonacci retracement. And of course, you can see a small little fair value gap here. Can you see it? So price retrace into it. The next thing that should tell you that this price is going higher is when this fair value gap that was here was invalidated. After the invalidation, price entered into it once, came inside again, second, and then travel higher, broke this high. What happened again? Look at this fair value gap. Price broke here, retraced into the fair value gap again. I'm just showing us how price continue higher. After a break here, it entered into this fair value gap. Can you see? And then broke higher again, went higher, entered into this fair value gap again. Can you see? There's a fair value gap and an inversion fair value gap. Price broke here, retrace entered. As much as that, can you see? Broke here again, came back, use this place as a means to still go higher, to support price higher. It came down like that. On the day I was trading this place, I just marked this place and put last resort. That means if price should break through this place, I was going to be selling it, but eventually price entered into it and of course continue to blow higher. Can you see? Continue to go higher and higher and higher. So this is how I use this concept. It's a very nice concept and you can learn it and make good use of it. Hopefully I've given you a value here. Please go into the chart, check it out. It's a whole lot of stuff. It's a great day. Well done.